Hello, this is Paula and you're with the weekly blockchain brief. We're experiencing a slight uptrend in the last 1 week, and many believe that this might be the reversal that we had been all waiting for. What do you think? Do you think that this will be a reversal or is just a bull trap? Looking at the fundamentals, and this is no financial advice or prediction, this is my personal belief based on all the data that we are looking at in macro perspective, that we still don't have enough macro fundamentals for us to actually experience such an upside downtrend. There are some upticks, but eventually the trend continues. So we're going to see how that will play out. Mainly, I believe this will be affected highly by the news, and that's why we're following them so closely here. So let's go right into the news and see what can potentially affect the blockchain markets during the next week. Let's see what important happened last week. We start with Gemini and Genesis, which you're probably seeing in the news a lot. Let's quickly recap actually how the whole thing started. Genesis is the trading arm of Digital Currency Group, and Genesis was the manager for the Earn program under Gemini, the US exchange. Sometime in Q4 last year, Genesis froze all the withdrawals for the program, so the Gemini customers were very upset. Then Gemini took it to Twitter and accused Genesis of improperly managing the funds, as well as providing false financial reports, and that they're not collaborative on returning the amount, which was more than $900 million. The latest development is that Gemini completely shut down the program, and there is no news on recovering the $900 million yet. But based on the information out there, there is a case ongoing. Of all that buzz, SEC started investigating both Genesis and Gemini for improperly handling customer funds. First, the SEC released a complaint that Genesis pulled the Gemini Earn program funds together with other customers' funds, which resulted in improper lending arrangement. Both companies are accused of violating federal financial law. And because of that setup where Gemini is actually in between, they're acting as the issuer and they're actually collecting fees in the middle. And at the end, it's like offering securities to retail investors. So that is what SEC will be prosecuting probably. Then we're moving to the overall outlook maybe for the industry. I always thought that the jobs market is very indicative. As you know, in macro, we are following very closely the jobs numbers to see how the Feds will act. And maybe if we implement the same into the crypto industry, the following numbers will give you an outlook what the companies are thinking is going to happen in the next 6 to 12 months. We have a lot of job cuts, starting with Hobby that laid 20% of their staff. We also have 20% cuts from Crypto.com, and Genesis Global Trading cut already 30% of their staff. As you know, Genesis is part of DCG Group that we just discussed, and they have multiple issues. So for them, it's quite natural to cut costs at the moment. And we also have Coinbase, which reduced their staff already a few times last year, and the latest one was by 20%. Which basically tells us that companies are really cautious with their treasuries, with their balance sheets, and they're probably expecting further drops, or the market at least to not move anywhere, because majorly exchanges are making money off cycles. When there is more volume, exchanges will be more profitable. So seeing such platforms cutting costs probably means that they're expecting the volumes to be pretty low. The news of today is something that doesn't have too much information out there, which is surprising for the type of allegation. It's regarding Nexo, and they are local offices in Bulgaria, which were raided by the local prosecutors. So the Bulgarian prosecutors are alleging that Nexo was part of large-scale international criminal scheme involving money laundering and violations of global financial sanctions against Russia. Else than money laundering, they're also accused of tax crimes and computer fraud. Not too much out there, as I said already. Only a statement from Nexo that is claiming that this is actually a result of corruption in the country and has nothing to do with their AML policies, which are very strict, and that they'll be actually suing the government for reputational damages. However, when we are talking about such serious allegations, such as not obeying sanctions, etc., this is a global financial crime and issue. So see if there will be any comments or any involvement from the international law enforcement. But so far, there is no other information than the news that the offices were raided and the statement from Nexo that they always complied with the AML policy and that they're going to be suing the government. First macro section of 2023. We closed 2022 with a pretty good data from the CPI, which got the markets excited. And the CPI is still 6.5 annualized, way down from what was a year ago. However, it's still quite far from the Fed's target. Dropping the CPI is a result of sharp drop in the gas prices and also obviously the effect of the Fed's hikes. Today in this section, I would like to discuss a bit more the outlook for 2023 and what we can potentially expect. What I have been broadly seeing is that everyone, financial analysts and researchers, are expecting that Fed will probably slow down with the hikes or stop completely this year, not really looking at cutting the rates, but at least slowing down, which in a way would stimulate the economy probably in the second half of the year. However, to reach to that point, Feds probably need to see a pretty much worsening economy, the new employment data to be coming down, for the inflation to be coming down as well, and eventually for us to be going into a recession. So things will get way worse before they eventually start getting better. Obviously affect the earnings and the equity prices negatively. There are a lot of believers that this year the blockchain assets diverge from the equity markets, which they were highly correlated with last year. And that's not my personal belief, but we would observe and see. What I think doesn't matter that much. Let's see what the big investment banks are predicting for the year. I feel that they're mostly in consensus. I read most of the 2023 economic outlooks. And in summary, I can tell you that, let's start with JP Morgan. JP Morgan is expecting that the global economy will continue to expand this year, but it's going to be at a pretty slow pace of around 1.6% for the whole year. And that the conditions will pretty much tighten, and they're seeing one of the major risk factors, the China's COVID policy, as well as the Europe's natural gas problems. While they're quite positive on the global economy, they believe that the US recession is inevitable and probably will happen before the end of 2023. But here maybe the question is how severe such a recession will be. In the first half of 2023, they're expecting that the S&P will retest the lows, the equity markets be pretty much squeezed by the low earnings. Potentially, there will be some recovery towards the end of the year if the Feds change their policy. So they're expecting 4,200 for the S&P by the end of the year. Let's go to Morgan Stanley, expecting also drop in asset prices, that the monetary policy will be the key driver for all asset prices in 2023, and that this will probably lead to cutbacks on earnings and increase default risks, widen credit spreads, and increase in the chances for a recession. Morgan Stanley expects a pretty mild recession. As we see, everybody has consensus on the recession, but just on the severity, as I said, Morgan Stanley is on the more mild side. They believe in the jobs market. The jobs market had been persistently pretty strong, and it's difficult to expect a deep recession with such a robust labor market. Coming to the VC section, put some statistics to evaluate the previous year. So there is this very nice chart from CryptoRank, which basically ranked the VC investment by month. And as you see, the last quarter of last year was pretty concerning. And we can see that we got only $670 million in ventures funding compared to $3.5 billion at the same time last year. Obviously, this is an indicator for squeezing the market, but also a bit of end of year slowdown in the deal making. Usually December is always a month where everybody's going on a holiday, so nobody's even picking up deals in the beginning. So I wouldn't that much count December, but then if we look at November and October, the numbers are relatively low, not that much low as compared to the previous year. But we definitely see that increase in venture funding. We can speak from our own experience, we see less deal flow, less deals happening. And there are two reasons for this, by the way. From the founder's perspective, everybody is expecting an improvement in the market, so they can potentially get better valuations and eventually get more funding for a higher valuation that can keep them ongoing for a longer period. And then on the VC side, we're seeing usually when we are in a bear market, this is always investors' market, so they have all the negotiating power and they're doing just the opposite. They're searching for the best deals. Especially in such markets, there are a lot of distressed companies which can be bought in for a fraction of the price that they actually deserve. So I feel that most of the VCs are very opportunistic right now, looking at liquidations. A lot of liquidations happened last year, so the assets are for sale sometime in Q1 this year. So they're just searching for opportunities and seeing where the market will go. Because if we continue to stay in this bear market for the whole 2023, they would probably need the liquidity to deploy that type of opportunistic deals I mentioned. So let's see maybe by names who's most active in the VC market for the previous year. As you can see, there is Animoca Brands as number one. You know that they're doing a lot of gaming investments. Lately, they started doing also other markets as Metaverse. I believe that they opened a new Metaverse fund. And they do also smaller tickets like pre-seed and seed. So I believe that's why the big number of investments. And then we have at second place Coinbase Ventures with 127 investments. And we have also Shima Capital, GSR, A16Z, Spartan Group. Like still decent amount of investments, but pretty low compared to the year before. And we're going to talk about one deal today. This is the Web3 studio Sortum. Sortum is a Web3 entertainment software developer, and the majority of the funds that they raised for the round came from the hedge fund Arca. The startup is first preparing to release a game which sounds pretty interesting. It will be a play-to-earn game. It will be called Cosmogene, and it will let players to create unique virtual genetic experiments. And it's AI-backed, so the more you play, the more the game will adapt to the player. So I'm quite excited to see that. I don't know about you. And this wraps up the VC section. This was all for today. Thank you so much for watching and wishing you a great week ahead.